Okay, so good evening, all of you. This is the first class of the Dawn series of SFM. Since it's a live class, please confirm whether the audio and the video are fine. Yes, please confirm whether the audio and the video are fine. I'm waiting for your confirmation. Yes, they are fine. So I'm getting a green signal as far as the audio and the video quality is concerned. Now this SFM Dawn series is actually going to be a summarization of the revision classes already available on YouTube, of the SFM marathon classes on YouTube, of the Challenger series on YouTube, and the Super 100 on ULearn. It is a compilation of the entire thing squeezed into a to-the-point discussion. Now those revision classes, Challenger series, Marathon, Super 100 were in Hindi mode. Therefore, these SFM Dawn series classes are in English mode. Yes, when I say English, it's 100% English. If at all I use Hindi in between, it will be a repetition, not a substitute. It will be 100% English. So anybody who has done the revision classes, Marathon, Challenger series is wasting his or her time by doing these classes, because it doesn't make sense. Because we will cover more or less the same material that we covered in the revision classes on YouTube, the Marathon, the Challenger series, the new types of sums, that portion and everything. Now these classes are going to be watched later by thousands of people. I should say 10,000, 20,000, 40,000 people in times to come. Therefore, I want to ensure that there is no time wastage in these classes. I mean to say, I cannot keep on taking your name. Hello Sarvesh, how are you? Hello Saloni, how are you? I can't do that. So it's a good evening to all of you, but specific names will not be taken. Secondly, these classes will be with a high benefit cost ratio. That means we are investing some time, our benefit should be maximum. Okay, we are not going to waste a time over here. Okay, it will be to the point discussion, because everybody's time is precious. Maybe some people have their examinations in May 22, some in November 22, some in 23, 24. So those who have the examinations in 23 or 24, they may not be so much stressed. But those who have the examinations in 22 are really stressed. So what about the fact that in future also new questions will arise in the MTP, RTP and the past papers? How will you add that? Do not worry about the same. I will keep on adding those new questions and discussion into the same Dawn series periodically. So I'll keep on adding, but I will not repeat this class again in future. I will not repeat. I will just keep on adding new questions discussion, okay, into the SFM Dawn series itself. There was a schedule shared with you regarding the tentative planning about the classes. Okay, a schedule was shared with you. I'm just showing it to you. It was shared on the Telegram. Just one second. Yeah. So this schedule was shared with you regarding how the classes will take place. So I mentioned each topic, how many days, the timing. Saturday, Sunday is a holiday for those who are doing live class, and those who are doing deferred live later, they can do it at their pleasure. So this is a tentative schedule. Now you must have seen me saying in classes that I do not target to complete this much in a particular class. It just happens by the flow. But over here I have targets to achieve. Okay, I have chosen specific sums to complete in the schedule which is presented over here. How will I achieve the same? Now in case it so happens that I am lagging behind the schedule, which means 6 classes of foreign exchange has been given, which I don't think are required. I think less classes are required, but so much of hue and cry is there about foreign exchange, and even the CA Institute gives us so much importance, okay, by linking it up with portfolio, linking it up with derivatives, that I took 6 classes plus this is the first topic. So if at all, if I lag and I'm not able to complete, in that case, the remaining questions as per my sheet which got to be completed, I will pre-record them and I will share the same with you, but I will not waste an additional class. I will not waste an additional class for the same. Okay, I will pre-record them and share it with you. Okay, but I will not ensure that Forex is 7 class, no. And the good news, in case we get to complete Forex in say 5 class, in that case, Forex 6th class, Tuesday 18th shall be a holiday. Okay, we'll enjoy a holiday because we have earned the holiday. We are running ahead of schedule. Okay, so we will enjoy extra holidays in the schedule whenever we feel that yes, we have overachieved our target. Okay, so we all enjoy such holidays, especially when live classes like a batch is concerned. Okay, today in the evening, I think half an hour ago, I shared a PDF regarding the questions which I will be solving in foreign exchange. Okay, this PDF was today shared on the Telegram channel. Okay, just one second. I'm not looking at your messages, so in case you are writing something, I'm not able to look at the same because this way I cannot focus on what I want to say. So this was the folder that was shared on the Telegram today. In case you did not receive the same, you will be mailed also the same. But today on the Telegram we shared. Now if you look at this folder contains around 39 questions that have been selected. Okay, this folder contains 39 questions that have been taken. The questions are given along with CA Institute answers. There are certain questions which are from our desk FOD. So obviously their solutions are not from ICAI. They are given by me. But 90% of the questions are from ICAI because ICAI has been recently experimenting a lot and they've produced a lot of new types of questions on non-deliverable forward contracts, on external commercial borrowing, on issuance bill versus transit bill, and the FDI guidelines on change in automatic cancellation. So a lot of new stuff has been given. So all that is there, plus some FOD questions from our desk questions, which means non-ICI questions also there. I have also included some very past RTP questions of 2002 or 2001. Okay, maybe you never know. ICI has it in their repository and they can now start shooting at you in the future examinations. I have never been a forecaster, whether it is market or whether it is the exam, so I cannot really say what exactly will come when your term becomes due, but your approach should always be to complete 100%, and then in the exam you use 5 or 10%, the remaining 80-90% stays with you as an asset forever. Okay, so that's how it goes. Now just for 5 minutes I am going to look at the messages that you all are writing. Okay, the messages that you are writing, so that if I am missing out something, I may just speak about it. So I am just going to look at the messages. Others can use this time to sip a glass of water. This recording will be available on YouTube. No, it will not be available on YouTube. It will not be available on YouTube. It will not be available on YouTube. Will we get a hard copy? No. No one will get a hard copy. It was all communicated. It's always soft copy. It is only soft copy. Can I watch the class later? Yes, within 6 months. Within 6 months you can watch the class later. Can I watch the Dawn series on Yulan again? Yes. I don't know 1.5 times or 1.4 times what's the view rate. Okay, that is given, that I am not aware. You can do live class or recorded class as you wish, but live and recorded, so I don't think you get 2 views. View limit I am not aware. You have to ask the staff. 40 questions of Forex are there. Thank you. So 40 questions are there. Yeah, PDF has been shared on SSCI Telegram channel. CA Final, SSCI one-way Telegram channel. PDF has been shared. Okay, PDF has been shared. Right now when we do the class, I will be showing you on the screen, so you won't have to worry if you don't have the PDF, but otherwise PDF has been shared. How many total lectures? The schedule has also been shared. Harsh, the schedule has also been shared. Once again, it will be shared on the CA Final SSCI Telegram channel. If you are not on the channel, it's very difficult to communicate with you. You can watch it later on again, but obviously there are view limits. My exam is due in November 23. Should I do it now? Yes, you should do it now, because there will be further updations to it now. There will be new questions added in May 22, in November 22, in May 23. So you'll get 3 particular terms, around 10-20 questions more by the time you are going to appear in November 23. So you don't have to worry. You should watch it if your SFM is over. Sir, there is a huge change or extra. Why are you getting afraid? Let's enjoy the classes. Sir, do we need to study before attending the class? I don't know. You should have a rough idea of the topic at least. That's worst to worst. Okay. That's it. Let's not waste time, because many people would be watching the class later on and everybody's time is precious. So let's start. Okay. So I'm starting the classes. So here I have my white screen. Now, one important concept that has become very popular is the guidelines regarding non-deliverable forward contract by RBI. Non-deliverable forward contract, NDF. By the name NDF, it was never taught in class. The class which you took, NDF was not covered. Why it was not covered? Because it was not anyways tested by ICAI in the papers or in the RTP or in the mock test papers. However, indirectly, while teaching derivatives, I have covered the same. I have always explained that derivatives means, in Hindi I say, kata koti, squaring off. That means it's a bet. A forward contract is also a bet. When you enter into a long forward contract on a currency, you are betting upwards. When you enter into a short forward contract on a currency, you are betting downwards. Okay? Long forward contract, you are betting upwards. Short forward contract, you are betting downwards. So, if in a forward contract, we do not have to actually buy, we do not have to actually sell, but we only settle the difference, that's called a non-deliverable forward contract. Believe me, it is not rocket science different as compared to what you have learnt in futures in the derivative chapter. So non-deliverable forward contract is a forward contract where we don't purchase, where we don't sell, no delivery takes place. Only the gain or loss is exchanged in dollar terms. The gain or loss is exchanged in dollar terms. It's more like a futures contract, not a forward contract. Okay, it's like kata kuti, what we say in Hindi, or a squaring off in English. Okay, that's a non-deliverable forward contract. So there was a question that came in the exam in non-deliverable forward contract, and I would like to start the discussion with the help of the same. Non-deliverable forward contract, if you want to write a statement, it's a forward contract where there is cash settlement in dollars. It's a forward contract where there is cash settlement in dollars. If you want to write, it's a forward contract where there is cash settlement in dollars. Physical settlement will not take place. Cash settlement in dollars. Okay, that's a non-deliverable forward contract. Okay, now let's come to the question involving the same. One second. So there was a question that recently came in the papers on non-deliverable forward contract. Yeah, question number 14. It is question number 14. It is there on your screen. Even if you don't have a PDF, you can right now share the question. I had shared the PDF on Telegram. Okay. On the SSCI CA Final Telegram channel. Now let's look at this question. On 1st Feb 2020, XYZ, a laptop manufacturer, imported a particular type of memory chips from SKH Semiconductor of South Korea. So imported. We have imported. So it's like a foreign currency payable. The payment is due in 1 month from the date of invoice, amounting to 1190 million South Korean won. So we have South Korean won SKW payable. We are afraid of SKW rising. Okay. We have to settle the payable as less amount of rupee as possible. If I repeat in Hindi, जितना कमती रुपया जाए उतना बढ़िया. Okay, we are afraid of SKW rising. Rupee per SKW rate. Rupee per SKW. Rupee per SKW. Following spot exchange rates 1st Feb are quoted in two different markets. So 1st Feb we are standing after 1 month. We have a payable of 1190 million. So the spot rate is given. You can see the chupki over here, the googly. Okay, the googly USD INR is given 75/75.5. You can see it's the rate of USD. So it's a googly rupee per dollar. Rupee per dollar. If there is a googly in the sum, it means in the entire sum all the rates are googly. If there is a googly rate for the second rate is SKW per USD. So we have rupee per USD, we have SKW per dollar. Rupee per dollar, SKW per dollar. So if we want to find out rupee per SKW, we have to cancel. That means we have to divide. Rupee per dollar, SKW per dollar. So we will have to divide. Okay, everybody is saying that the sound is cracking. Is it? People are saying that there is some sound issue, audio issue. Initially, I asked you all, so I got a green signal. Is the sound issue fine now? Okay, people are saying now it's fine. Okay, people are saying now it's fine. Okay, so maybe if I am putting in the collar, there is a problem occurring. Okay, let's continue. So I was saying that I don't understand so much of impatience you all show. Relax, relax, slow it down, please. Okay, slow it down. So I was saying that we are given the rupee per dollar rate, we are given the SKW per dollar rate. We have to find out the rupee per SKW rate. Obviously, we have to divide rupee per dollar divide by SKW per dollar. So we have to divide. And we need the ask rate. We need the ask rate. So 75.5 divided by 1190. 75.5 divided by 1190. Although I'm not going to do it, not the division, because we don't need the spot rate. We have the payable after 1 month. Okay. Since hedging of foreign exchange risk was part of company's strategic policy, and no contract for hedging in SKW was available at any inshore market, it approached an offshore non-deliverable forward market for hedging the same risk. So when people must have read this sum in the exam, the first para would have been very easy. Okay, we have to find out the cross rate, rupee per SKW. But when they read the second paragraph, they found that it's going into some other territory, non-deliverable forward contract. Okay, because SKW contract is not entered in India. In NDF market, a dealer quoted 1 month SKW per dollar rate at 1190/1190.5. So we have to buy SKW. But the base currency is dollar. This is googly going on. The base currency is dollar, which means SKW has to be bought, which means US dollar has to be sold. So which rate is relevant over here? 1190 or 1190.5? We have to buy SKW. That means we have to sell US dollar. US dollar is the base currency. There's a googly going on. So which rate is relevant? 1190 or 1190.5? It is 1190. Okay, 1190, because we have to sell dollar. Dollar is the base currency over here. And I think the amount was 1190 million South Korean won. So 1190 million South Korean won at the rate of 1190 would actually be equal to 1190 divided by 1190. 1190 divided by 1190, which means 1 million. Okay, $10 lakh. $10 lakh. Okay, 1190 by 1190, it's $1 million. That is $10 lakh. Okay, 1190 by 1190, it's 1 million, that is $10 lakh. For a notional amount of USD 1 lakh to be settled at a reference rate. So that's misprinting. It's actually $10 lakh. They have written $1 lakh because the amount over here was 1190 million. It was not 1190 lakhs. But we say in Hindi na, बड़े बड़े देशों में छोटी छोटी बातें होती रहती है सीनियोरिटा, so they can do all these mistakes because they don't understand million the way most Indians don't. Okay, so it's $10 lakh. After 1 month, that is 1st March 2020, the dealer agreed for SKW 1185 per USD as the rate for settlement, and on the same day the spot rates in the above market were as follows. So for the NDF settlement will take place at 1185. Now this is the rate of USD. SKW we were purchasing long, that means USD short. SKW long, that means USD short. So if you go short on forward, you will gain if the price falls. If you go short on Reliance, you will gain if Reliance Industries price falls. If you go short on gold, you will gain if the gold price falls. If you go short, you will gain if the price falls. So on USD, we are short at 1190 and the rate has become 1185. So we have gained on the NDF. Understand please, focus on the base currency. We are buying SKW forward, that means we are selling USD forward, short position, and USD the rate has gone down from 1190 to 1185. That means on the betting we are gaining. Okay, to find out the gain, please convert that 1190 million into US dollar. 1190 million divided by 1185, what is it? 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 Please tell me in open form. 1190 million divided by 1185. Please tell me in open form. 1190 million divided by 1185. It is 10,04219, and it's coming to 10 lakh 4,219, I think. 10 lakh 4,219. 10 lakh 4,219. Okay, 1190 million divided by 1185 is 10 lakh 4,219. Perfect. So initially it was $10 lakh. Now it is 10 lakh 4,219. That means the gain is equal to $4,219. The gain is equal to $4,219. The gain on the NDF is $4,219. I said NDF is a forward contract where there is cash settlement in dollar terms. NDF is a forward contract where there is no physical settlement. There is cash settlement in dollar terms. So initially the 1190 million was $10 lakh, and now at 1185 it is 10 lakh $4,219. So 4,219 is the gain. How do you understand it's a gain? Understand please, the base currency is USD. What are you doing on USD? SKW we are long because we are buying, we have a payable. That means on USD we are short. On USD we are short, and you know that if you are short, if the price falls you gain. The price fell from 1190 to 1185. So you gain $4,219. $4,219 is the gain on the NDF. $4,219. After 1 month, this reference rate, settlement rate is given, and the spot rate is given. Analyze the position of the company under each of the following cases, comparing with spot position on 1st Feb. Number 1, do nothing. If we do nothing, then compared to 1st Feb, what is the gain or loss? 1st Feb is the reference point. 1st Feb, what would have been the rupee outflow? Let's calculate. On 1st Feb, the cross rate of buying SKW, rupee per SKW ask rate is 75.5 by 1190, and you have to pay 1190 million. So please find out 75.5 divided by 1190, the whole into 1190. Open form. 75.5 divided by 1190, the whole into 1190 is coming to, I think, 75.5 million rupees. 75.5 million rupees. Okay, 75.5 by 1190 is the cross rate initially on 1st Feb, and that multiplied by 1190 is obviously 75.5 million rupee. This would have been the rupee outflow on 1st Feb. Although 1st Feb is not relevant, but they have made it relevant because they have written by comparing with 1st Feb. So 75.5 million would have been the rupee outflow on 1st Feb, would have been. If anybody asks me, why are we taking 1st Feb rate? That's irrelevant. Yes, you are correct. But the question is saying comparing with the spot position on 1st Feb. So we have to take 1st Feb as the basis of comparison. 75.5 million. Okay. However, do nothing. If we do nothing, then after 1 month in March, the rate is 75.75 divided by 1188. So please do 75.75 divided by 1188, the whole into 1190 million. 75.75 divided by 1188, the whole into 1190 million. What is it? 75.75 divided by 1188, the whole into 1190 million. 75.75 divided by 1188, the whole into 1190. 75.75 divided by 1188, the whole into 1190. It's coming to 75.878 million or 75.875 million, whatever. 75.875 or 878, million. 75.88 million. So it would have been 75.5 million on 1st Feb, but on 1st March, if we do nothing, our outflow would be 75.88 million. So in that case, there would be a loss. 75.88 minus 75.5. 75.88 minus 75.5. 75.88 minus 75.5. 75.88 minus 75.5. It is around 0.38 million. So in do nothing, there would be loss of 0.38 million. 0.38 million rupees. 0.38 million rupees loss. Okay. 0.38 million rupees loss. 0.38 million. If we look at, they've written both rupee per SKW rate and final payment are to be computed in lakhs, not million. So it's 3.8 lakhs. 0.38 million means 3.8 lakhs is the answer approx. To be rounded off to 4 decimal places. I have not done 4 decimal places and all that. The rate was supposed to be found in 4 decimal places. So we are going to find some difference between our verbal answer and the CA Institute answer. You were supposed to find out 75.75 divided by 1188 in 4 decimal, then multiplied by 1190. That is what you were supposed to do. But we just did it on the calci. Okay. So if we check the Institute's answer, on 1st Feb, they have calculated the rate 75.5 by 1190. We never calculated, they had calculated in 4 decimal, 0.0634. That's a rounded off figure. And they multiplied by 1190, they got 754.46. We got 755.5. Or we got 755 lakhs. 75.5 million. So we got 755, they got 754.46. Their answer is correct because it's written that you have to find out the rate in 4 decimal places. It's written you have to find the rate in 4 decimal places. We were doing on the calci. Okay, so our process was correct. Find out the cross rate 75.5 by 1190 and then multiplied by the payable amount. We did straight away. They found out the rate in 4 decimal place, then they did it. So they got 754.46 lakhs. So if you talk about the sum wise, they have done it correctly because we had to find out the rate in 4 decimal places. But on 1st March, the rate is 75.75 by 1188.0638 multiplied by 1190, 759.22 lakhs. So the loss is 4.76 lakhs, not 3.8 lakhs. So our answer was not incorrect. But since we did not read the last line that we have to find out the exchange rate in 4 decimal places, hence the difference. what solutions I have seen in the past, the corrections. If somebody gives an answer of 3.8 lakhs, the institute will mark him wrong. If somebody gives 3.8 lakhs, the institute will mark it wrong. And you can't blame the institute over here because they have categorically mentioned that you have to find out the exchange rate in 4 decimal places and then use it. So if you are not reading the question, in that case, you will yourself be to blame. Conceptually on the calci, 3.8 lakhs is the correct answer. But from the exam point of view, you have to give the answer which they are getting. And this time they are not wrong. They are exactly correct. Because they have written you have to compute the rate in 4 decimal places. No, I cannot explain again, Aditya. You're asking me to explain again. I can't explain again. Okay, I've explained it to the extent of my abilities. You can watch the video again. Okay, so you have to find out the rate in 4 decimal places. The initial rate was 75.5 by 1190. Okay, and the final rate was 75.75 by 1188. Those 2 rates, the difference multiplied by 1190 million. You have to find out in lakhs. That comes to 4 lakhs something. Okay, that is the loss. If nothing is mentioned regarding decimals, what should we consider? I don't know. If nothing is mentioned about decimals, what should we consider? I don't know. Usually small exchange rates like these, which are coming up in points, decimal points, 0.06, the exchange rate 0.0634, they have to be in 4 decimal places. But big exchange rate like 70 point something can come in 2 decimal places. So exchange rates, whether they should be in 2 decimal or 4 decimal, depends upon the value of the exchange rate. If it's a big exchange rate like 75 point something, it can be in 2 decimal. If it's small exchange rate, it has to be in 4 decimal. That's the only guidance I can give. Okay, illogical questions which people are keeping on asking. Sir, can I watch the video later? Yes, you can watch the video later. I will ignore such people and I will keep their name in check so that I will ignore them completely throughout the course, this SFM Dawn series. And the second question, where is the PDF available? The PDF was shared on Telegram today. And right now it's there on the screen. Now, the main reason why we did the question was because of the NDF. Now in the NDF, we saw that it's 1190 by 1190, that is $10 lakh. But based on the reference rate later, 1190 by 1185, it was 10 lakh 4,219, I think. So $4219 was the profit on NDF. 4219 was the profit on NDF. 4219, that's matching. So why is this part matching but that part was not matching, this 4,76? Because in that part we had to find out the cross rate in 4 decimal, which we did not. But in this part there is no cross rate required. We straight away use the exchange rate given, the 1190 and the 1185. Okay, next, you can ask all stupid questions. Rashid, I will not reply. You can keep on asking. So we are gaining $4219 in the NDF. But we have to find out the rupee outflow under the NDF. So to find out the rupee outflow, please understand the NDF was done separately. The NDF was done separately, but you have to ultimately pay based on the 1st March rate. So the 1st March rate, the payment which we got, that payment was 759.22 lakhs. Based on the 1st March rate, the payment was 759.22 lakhs. So that's the payment you have to make. And on the NDF, you have a profit. So that profit will reduce your net outflow. Even if you do NDF, you will settle the payable to the party. Even if you do NDF, you will have to settle the payment to the party at the 1st March spot rate. So you got 759.22 lakhs over there. But because of the profit on NDF, your net outflow would be lower. But the NDF profit is in dollar terms. So we have to convert that profit into rupee terms. We have to convert the profit into rupee terms. So the $4219 we will sell spot on 1st March. The $4219 we will sell spot on 1st March. What is the rate for selling dollar on 1st March? Rupee per dollar 75.5, 75.75. So to sell dollar, the rate is 75.5. On 1st March, you gained $4219 on the NDF. You will sell that dollar at 75.5. So 75.5 into 4219. That's the profit on NDF in rupee terms. That will be reduced from the outflow of 759.22 lakhs. Okay, 759.22 lakhs. Let's see the NDF answer. Yeah, minus the profit on the NDF, 4219 into this. So the outflow via NDF is 756.0347 lakhs. 756.0347 lakhs. Okay. Whereas on 1st Feb, the outflow would have been 754.46. So the loss is 1.5747 lakhs compared to 1st Feb. So there is a lower amount of loss in NDF. There was a bigger amount of loss if you do nothing. It was 4 lakh something. Here it is 1 lakh something. So NDF is preferred. What is preferred? NDF. I don't like the language NDF is preferred because we are able to say this on 1st March when everything happened. Okay, you can't give an advice, but they always do it this way. Okay, NDF should have been preferred is the better language. But leave the better language. Let's give the CA examination. Then we use the better language in real life. So this was the NDF thing. It's very, very important for the exam. Do not think it's a one-time affair. It has come once. It will not come in future. It is going to come again. And if you just understand it simply, in a NDF, you are entering into a forward contract betting wise. It's like a futures contract. So you find out the gain or loss in dollar terms. That will be the settlement. Cash settlement, no physical settlement. Okay. I'm looking at conceptual doubts if somebody is asking on NDF on the screen. So Amit Raut is saying, is it similar to forward cover versus no cover? There was no cover, do nothing was no cover, but NDF was not like exactly forward cover, because even in the NDF we did no cover, but it was more like futures. If you remember futures hedging, it was more like futures hedging, because in futures hedging I used to teach you that whatever payable you have to meet, you meet from the market, and the futures is for squaring off. So I think you can picturize the NDF sum to be more like the futures cover. Okay, very good. Yes, very important. You had done futures cover, okay, in the derivative chapter. So the NDF thing can be imagined like the futures cover, but but all those standardization and all that is not there. I've already explained it's similar to futures cover. 1188.5 should have been used. Why 1188.5? Let's see. Why 1188.5? You are totally wrong. The first rate is rupee per dollar. The second rate is SKW per dollar. Rupee per dollar, SKW per dollar. So in that case, we take ask by bid. So 75.75 is the ask. Divide by 1188 is the bid. And if you are talking about the NDF, 1188.5, no, wrong. For the NDF, the reference rate is given. 1185 is separately given. It is clearly given. For the NDF, two different rates are separately given. Is there any margin requirement? No, just because I said futures, you can't go to standardization and margin. In forward, there is no margin requirement. Please summarize NDF calculation once again. I cannot. I'm sorry. So Mayank Arora is summarizing. He's saying that, sir, in NDF sums, we have to assume there is no cover and do the normal hedging, do the normal payment payable, and then find out the gain or loss on NDF, convert into rupee terms, and find out the net outflow or inflow. Correct. That's what we are doing. Okay. Now Anil Kumar Shaw is saying this concept is already covered in new types of sums. Yes, it is. Everything that we are going to do in the Dawn series is covered in the revision classes, in the new marathon classes, in the new types of sums. It is covered in Hindi. Here we are doing in English. So anybody who has done those classes is wasting his time by listening to the Dawn series again. Okay. NDF definition I gave when the class started. If people are bent upon time wastage like we used to do in Provise, I am not there for time wastage like Provise. This is not Provise classes going on. Okay. So this was one particular sum that we have discussed. Now, we are going to the next discussion. The next discussion is about post-shipment finance, post-shipment credit. So I'm not looking at your messages. If you want to keep on typing to improve your typing speed, please move on. There is no problem at all, but I'm not looking at the messages. Post-shipment credit. Now this is an export credit. If you are an exporter and you export goods abroad, obviously, after the shipment of the goods, you want money. Otherwise, all your money that you have invested in raw material, in packaging, this and that, is blocked for another 50, 100 days. In order to encourage exporters, Government of India runs a pre-shipment credit and a post-shipment credit. Post-shipment credit is after shipment, banks will finance you concessionally at a concessional rate of interest. That is called post-shipment credit. What is pre-shipment credit? Before the shipment of goods, you need money for the purpose of carrying out production, for the purpose of raw material, for the purpose of labor, okay, for the purpose of packing. So all that is called pre-shipment credit. I am over here talking about post-shipment credit. Now we used to do sums under the heading cross rate, where we used to get a receivable or a payable in some third currency, say SKW, and we had to then use the cross rate for the purpose of getting the answer in rupee terms. It was a very popular sum in cross rate involving letter of credit. You can check in your copy. Cross rate sum involving LC was there. Now this sum, post-shipment credit, is a new one. It is new in the sense that you are exporting and you are drawing a bill of exchange on the other party. So bill of exchange has a certain period. That period of the bill is called the usance period. Usance. Some people call it assuance. Usance period. And there is a transit period because the goods will go over there. You'll get the shipping documents. So there is a transit period. We have not come across these terms in our classes. Usance period and transit period. So if you feel a bit odd about them, it is good because the classes are meant to teach you something new. If you look at the 39 sums that have been taken, out of the 39 sums, there are around, I think, 10 or 12 sums which are actually new. Otherwise, the remaining 29 sums are present in our existing mat. It has been done in class. Or similar sums are present in the mat. Either the same sum or similar sums. New sums are only 10 or 12. So my extra stress is on the new sums. Okay, this is a new sum, post-shipment credit. So if a question comes in which you are given the transit period and you are given the usance period, then you will add the two periods. And when you approach the bank for credit, bank, I need funds today, the bank will have to quote a rate, a forward rate, find out the rupee amount involved, and then give it as a loan to you. And the bank will charge interest. So you have exported goods. You have got all the shipping documents, the proof that you have shipped the goods. Okay, you also have the bill of exchange. You also have the letter of credit, a guarantee by a importer's bank. With all these documents, you go to your bank for negotiation. That means for getting the amount. But why should you get the amount? Because the bill of exchange is for 60 days. Suppose the transit period is another 30 days. So there's 90 days. So you should get the money after 90 days. But no, you want the money now. So it's a loan. You are taking a loan because that money is going to come. And the bank is not afraid because there's a LC. So foreign bank has guaranteed. So since our bank is giving us a loan today, it will charge interest for the transit period plus the usance period. Usance period is the period of the bill. And transit period is the period that is expected to be taken for the realization of money, as in the goods going, the shipping documents and everything. That's called transit period. All these things can be explained in much more detail if we are doing an export-import course. Okay, and practically what we have to do in the sums and what happens in practical life is not the same. I repeat, practically what we have to do in the sum and what happens in practical life is not the same. So if you happen to have some friend of yours or as a part of your auditing engagement, when you do some bank audit and you come across this transit period and usance period as a part of the bank audit and FIDI, and you find that no, sir has taught something else, You are correct. You will find that I'll be teaching something which is wrong, which is not the way it happens in reality, in real life. Okay, but I have to teach you and prepare you for the exam. Of course, as a gesture, once I complete the discussion, I will tell you the way it happens in real life. Okay, but that would be just a 1 minute passerby discussion. Okay, I will focus on what you have to do in the exam, which is inconsistent with how it happens in real life. Okay, so that is very, very clear from my side. You can't blame me later that sir had taught me wrong. I am teaching you what ICAI solution wants us to do. It is as simple as that. Okay, we can better now understand with the help of the question that came in the exam. Okay, let's have a look at the question. Yeah, so this is the question. Question number 12. Question number 12. This PDF has been shared on Telegram, CA Final, SSCI Telegram channel. This PDF has been shared. I will share it again after the class or in the break, if we have a break. Let's read the question. Question number 12. Messrs. Sky Products Limited of Mumbai, an exporter of seafoods, has submitted a 60-day bill for euro 5 lakh drawn under an irrevocable letter of credit for negotiation. Now, rather than trying to be so much heavied by the statement irrevocable negotiation, okay, you should focus that it's an Indian exporter. So if an Indian exporter, it has a foreign currency receivable. What is the receivable? 5 lakh. What is the days? 60 days bill. So the simple concept is, okay, after 60 days we are going to receive 5 lakh, it seems. The company has desired to keep 50% of the bill amount under the exchange earners foreign currency account. So they don't want to convert 2,50,000. They only want to convert the remaining 2,50,000. They don't want to convert 5 lakh. They only want to convert 2,50,000. Okay, the remaining shall remain over there. The rate for rupee per dollar and USD per euro in the interbank market are quoted as follows. So rupee per dollar and dollar per euro, if you multiply rupee per dollar into dollar per euro, you will get rupee per euro. That's bacha stuff. Rupee per dollar into dollar per euro shall be what? Rupee per euro. Okay. Yeah, somebody saying, sir, it's similar to bill discounting. Correct. Okay, but the way CA Institute has done it, it is stupidity. The solution that has been done, it will hurt our brains, but we have to. Can't help. So we are given the spot rate, rupee per dollar, dollar per euro. We are prepared to multiply them, and we are given the 1 month, 2 month, 3 month rate. Remember, we want the rupee per euro rate and the bid rate. So bid into bid is bid. Okay, bid into bid is bid. Okay, the two bid rates. So we are given the 1 month rate, 2 month rate, 3 month rate. It seems like we should use the 2 month rate because 60 days bill. Transit period is 20 days. I said there is another period. So the 60 days is the issuance period. This 20 days is the transit period. So 60 plus 20 is 80. Okay. Whenever you have such a sum, where you have the issuance period and the transit period, you add the two up, total period, and you always do a lower rounding off for the purpose of finding out the exchange rate. You don't find out the 80-day forward rate, okay, by unitary method. You have to do a lower rounding off to find out the rate. So here, what is the lower rounding off? Is it 60 or is it 90? What is the forward rate? Is it 60 or is it 90? Is it 60 or is it 90? So some people like Komal are quoting sites, page number this, sum number this in our book. So Komal, you might have done the sum, but I don't remember having done this in the English batch. So the lower rounding off, I didn't say closer rounding off, I said lower rounding off is 60. I didn't say closer rounding off. I said lower rounding off. So 80 is rounded off to 60. Now you have to know this. This is something which cannot come conceptually in the exam hall. It has to be done from home. Okay, it is as per FIDI guidelines. So 60 days rounding off. So and the exchange margin is 0.1%. So, exchange margin shall be deducted because the customer has to suffer. The customer is selling euro. He'll be quoted the bid into bid rate less 0.1%. So, rupee per dollar, the bid rate is 67.8 thousand minus 0.0021. No, I am really confused because it's written 21 paise, so it should be 0.21. So 67.8 minus 0.21 is what I think it should be. Okay, 67.8 minus 0.21. I don't know whether they'll do 0.0021 because it's clearly written paise. It's if 21 is paise, it's 0.21 rupees. Na? There is no question of dividing by 10,000. So I think it should be 67.8 minus 0.21, but I keep my fingers crossed. So you don't know the answer? No, I'm not mugging up and coming for here the answer. I don't have lack in life. There are other things. The market is there for me to see. When we see the USD per euro rate, we have 1.0775, and why did I do minus? It will be plus now. 21, 22 is low high, plus. I'm sorry. So 67.8 plus 0.21. Sorry, I said minus. 67.8 plus 0.21. 67.8 plus 0.21, okay, or plus 0.0021. Logically, it should be plus 0.21. And over here, we have 4 decimal place. So 1.0775, it should be plus 0.0040. 1.0775, it should be plus 0.0040. Okay, plus 0.0040. This is my gut. It should be this way, and then we should multiply both the rates. Multiply both the rates and then deduct 0.1%. Multiply both the rates, then deduct 0.1%. Okay, so they're asking us, interest on post-shipment rate is 8%. That's a different thing. They will charge interest on the loan provided today. Exchange margin 0.1%. Assume 365 days in a year. Find out the exchange rate quoted to the company. So the exchange rate shall be the 60-day rate, the lower rounding off rate, 60-day rate, which is bid into bid minus the margin. Let's look at the solution. If we look at the solution, the institute has written transit plus issuance 80 days rounded up to the lower number of months. So forward bid rate has to be taken the 60 day. So 67.8 plus 0.21, correct? Okay, 68.01. They have done the margin deduction over there only. They could have done it later on. It doesn't matter. The answer will be same. If they do later on, because if you do A into B, and then multiplied by C, or you do A into C multiplied by B, it's the same thing, na? So even if you deduct the margin 0.1% later, the answer will be same. The answer will be same. I am not talking about decimal place fight, but it's simple maths, okay? I mean to say, this is really going to cause confusion. If I do bid rate into bid rate, and then I take 99.99%, or if I do bid rate and take 99.99%, whatever I get, and then I do into another bid rate. Look at the same, the maths is same. Can you see this? Can you see this, please? I hope you can see this. So whether I deduct the 0.1% after calculating the cross rate, or I deduct it from the rupee per dollar rate and then multiplied with the dollar per euro rate, the answer will be same, of course subject to rounding off differences. What is good from CA Institute examination point of view is to know everything, to be very, very knowledgeable, but at the same time to be humble and to understand that ICAI is the BAP of the BAP of the BAP of the BAP. Sanjay Saraf is nothing. Whatever ICAI does is correct. So we should try to adapt. So if I were sitting for the examination, I will keep my head very high as far as knowledge is concerned. But I will try to look at the ICAI solution and try to adjust myself towards that, because I need to get the best of marks. So I would do the way Institute has done. And I would mold myself by looking at a number of sums. When you see a number of sums, you understand the way they are doing it. Okay, so you tend to understand that. It can be frustrating for some people who are like very conceptual. No sir, this way I can't remember. Okay, so in that case, maybe it's a wrong course that you have joined, but this is the reality. Okay, this is the fact, and it doesn't only happen in SFM, it happens in other subjects also. It's just that in SFM you expect an extra degree of perfection. So they have done 68.01 less 0.1% margin and 1.0775 USD euro, and then add premium 0.0040. So nobody can say, sir, in 21 they did 0.21, but regarding 40 they did 0.4. No, they did 0.0040 because 21 was paise. Okay, so it was like divided by 100 rupees. The other rate was in 4 decimal places, so it was divided by 10,000. Okay, you have to be smart. I think that's the most important thing in this question. This was the most important thing in this question. I've already explained, Pranav, when the rates are given in 4 decimal places, then the swap points are to be divided by 10,000. Okay. Some common sense is also there, and if you want to fight, you can keep on fighting, and the best is you can mail to the examination department of the ICAI. Okay. Or you can adapt to what I'm trying to say. So my explanation is that the rate 67.8 is a big rate. 21 paise is a small amount, 0.21. We don't have, I don't know, paise upon 100 is called what? Sub paise. Okay, but the rate 1.0775 is a 1.0775. So 0.07 is big. If you do an adjustment of 0.4, that becomes 1.47. An exchange rate of 1.07 cannot become 1.47 in 2-month period. It doesn't happen. If you have common sense, an exchange rate of 1.07 does not become 1.47 even in a year. 50% appreciation or depreciation does not take place. That's the biggest common sense that's there. If you get it, fine. And if you are after the cents and paise, it is as your conscience allows you to do. Okay. Whenever is not the thing, it is a question of common sense. 1.07 cannot become 1.47. If you got it, well and good. If you didn't get it, it's unfortunate. So that is 1.0775 plus 0.0040 because 1.47 is not allowed. It's a 50% appreciation, whereas 67.8, 0.21 is very perfect. So that's the exchange rate to be quoted. Cash inflow to the company. So whatever rate you got, that multiplied by whatever rate we got, that multiplied by the amount which was 2,50,000, not 5 lakh. Because we did not want to convert the remaining 2,50,000. We only wanted to convert the 2,50,000. So 2,50,000 multiplied by the rate in the first part shall be the cash inflow to the company. Interest amount to be paid to the bank by the company. So interest amount shall be for 80 days. Interest amount shall not be for 60 days. Interest amount shall be for 80 days. So you calculate interest for 80 days. Okay, at the rate of 8%. Interest for 80 days at the rate of 8%. So this is once again the sum that shocked people. The NDF sum also shocked people, and this sum also shocked people. This is the reason why these classes are happening. It is not happening for all the 39 sums that have been given. Many of the 39 sums which are given in Forex, I have done it in the class. In the class means the English batch. I'm not talking about the revision classes and the challenger series and the new marathon. Okay, I am talking about the English batch itself. If you check out in your copy, okay, there were sums which are included in the 39 sums which I consider very important, and I've taken it again, but which are already done by us in the English batch. Okay. Anyways, so this is that sum. There's a huge confusion about 0.21 and 0.0040. Believe me, if you think conceptually about it, 67.8 a big figure, 0.21 is perfect for that. 1.07 is a small figure. We can't have 0.4 added to it. Okay, it will shock the rate. That cannot happen. Okay, so you have to also be mindful about that. Now, why did I say that the solution is completely wrong? Let's talk common sense about it. In real life, if you are listening to me properly, negotiation of a bill always takes place at the spot rate. Negotiation of a bill takes place at the spot rate. I mean to this, a spot rate is 67.8 into 1.0775. Can you see that? 67.8. People are not listening now. They're keeping on writing their own stuff because they want to become typing champion. Please continue. 67.8 into 1.0775. At that rate, 2,50,000 is converted because that's the loan amount. That is the only logic why we are keeping the remaining 50% in the exchange earners foreign currency account. Because there we expect an appreciation will take place in dollar and we'll be able to sell it at a higher rate. Why would the bank convert the amount at the forward rate and give us the loan today? It doesn't happen this way. So if you have any bank audit, you might be having some officers who are working in the export-import division of the bank, even the scheduled commercial Indian banks, Bank of Baroda and all that. And you can ask them, they will tell you negotiation of the bill does not take place at the forward rate. It takes place at the spot rate. At the spot rate. So the answer is completely wrong. Secondly, transit period is not associated with a issuance bill. Transit period is associated with a sight bill. You must be knowing what a site bill is. You must have done it in law. Can I have the knowledge from you? What is a site bill? What is a site bill? What is a site bill? A site bill does not have a period. There's no 60 days. It's just payment on site. Okay, there is no 60-day period over there. There we have the concept of transit period as per FIDI. And the minimum transit period as per FIDI is 25 days. It's not even 20 days what's written over here. For some Scandinavian countries, RBI, FIDI allows a higher transit period up to 90 days. If you look at the FIDI guidelines, you can have a look at it by Googling after the class today. So transit period doesn't happen with a usance bill. It is actually stupidity that we have a transit period with a usance bill, because the 60 days already incorporates the 20 days. The 60 days incorporates the 20 days. So there is too much stupidity in the question and the solution, which actually defies all practicality. And I request you that if you have references, you can verify it with your references, that how does it happen in real life. So I may not go into it. A student is writing, why didn't you apply the margin on the USD per euro exchange rate? So you're going to apply the margin twice. 0.1% first deducted from rupee per USD, then 0.1% deducted from dollar per euro. Have you lost it? The margin is to be deducted once. My style in class was to find out the cross rate, then deduct it. They have deducted from one particular rate, rupee per dollar, then multiplied by the dollar per euro rate. Both should give the same answer, subject to rounding of differences. I explained that very clearly. We are taking a 10 minutes break. We are taking a 10 minutes break. Okay, 10 minutes exactly. There's a break of 10 minutes. Okay, so it was a 10-minute break, 1.5 minutes left. So one question raised by a student was that how can a 60-day forward rate be used for 80 days? The biggest joke is that how can a 60-day forward rate be used for today? Because at the forward rate, we are getting the money today. That is the biggest stupidity. What talk about 80 days? We are using the 60-day forward rate to get the money today. Isn't that the biggest joke, for which I give the explanation that in real life negotiation takes place at the spot rate? Some people asking mechanical questions. All the topics, how they will be completed. Their schedule was shared. And once again, I have asked my staff to share the schedule on Telegram. SSCI CA Final Telegram channel. The entire schedule. You can watch the class live, you can watch the class later. The validity is 6 months from the time you logged on to the classes. Some people are bothered about 365, 360 days, what to use. If it's given in the sum 365 days, use 365 days, no? If it's not given, assume use whatever you want to. I have seen CA Institute has never deducted marks aggressively on the use of 365 versus 360 days. So I think this is something that you should not apply your brains. Pavan Gulecha is saying new sums, please do it practically. So are we doing it theoretically? We are doing it practically only. We are not doing it theoretically. If you mean to say practically means, sir, please dictate like you used to dictate in class and let's do the sum in a dictated manner. No. Because the dictation will involve that I will do it as per my presentation. I don't want to do that. Your mind has to be matured enough to understand the discussion, look at the ICI solution, move ahead. Because if it is not matured enough, I don't know how would you compete with other students. Your health seems to be a bit unwell. Yeah, I am not able to speak, especially if I speak aggressively, my voice doesn't support me. And I'm seeing that cough coming again and again. So one thing that I have to try is to speak in a very relaxed manner. This PDF sums are sufficient. PDF sums are sufficient means what? You will not do any other sums. You will only do these 39 sums of Forex. Nobody knows what is sufficient, but they are quite representative of the recent questions that have been asked by ICI. Will you cover concepts in brief? I have been. When I explained NDF, I explained the concept. When I explained this post-shipment, I explained the concept. Are you talking about, would you explain what is your bid rate, ask rate, what is an exchange rate? No, that won't happen that way. I will not be covering what is an exchange rate. Because that way there has to be, I think, 10-15 classes for Forex alone. Are you going to complete all the new sums and then hop on to book sums? I don't know. My first target is to complete new sums and then for the book sums, depending on the time left, we will see. थोड़ा बेसिक्स में confusion है. You have written in Hindi, तो मेहनत करके जो पॉडकास्ट ऑडियोज दिया हुआ है, ऑडियो भी तो दिया हुआ है रिविजन के लिए, वो सुन के रिविजन कर लो ना घर पे. ओके, ऑडियो पॉडकास्ट है पूरे फॉरेक्स का, वो सुन के रिविजन कर लो. PDF is not available on SSCI CA Final, is it not? आज ही मैंने शेयर किया था खुद ही और अभी वापस से शेयर हुआ है. ये रहा साफ साफ PDF दिख रहा है, कुछ भी बोलते हो. SSCI CA Final Academic Discussion Channel जिसमें राइट नाउ 19417 मेंबर्स हैं, उसके अंदर PDF दिया हुआ है, मैपिंग शीट दिया हुआ है, कौन से न्यू सम्स है, कौन से सेम सम्स है, कौन से सिमिलर सम्स है, और क्लास का स्केड्यूल भी दिया हुआ है. Yogesh Rathi is saying it's not available. So you may have some different eyes. Where from can I get the revision audios? You can get it on Q Forum. Q Forum पे भी audios है, ऑडियो पॉडकास्ट सीरीज. और ये वाला जो PDF है, इसमें भी शुरू में लिंक दिया हुआ है पॉडकास्ट सीरीज का. ये जो PDF है, इसमें भी लिंक दिया हुआ है पॉडकास्ट सीरीज का. किसी का मन कर रहा है यहाँ पे पोर्टफोलियो के सम पूछने का, तो कॉर्नर पोर्टफोलियो का सम्स पूछ रहे हैं दीपिका जी. आपका मन आप पूछ सकते हैं, टाइपिंग करना अलाउड है. Pooja Chawla is saying that if I would be glad if you pay stress on nose through account sums. Okay, as if nose through account sums was not covered in class. Anyways, I will do as I have decided, which is for the better good of all people. If somebody doesn't remember Forex at all, and he may feel the classes are not beneficial for him, can't help. Okay, these classes are not meant if you don't remember Forex, you will start remembering it. It doesn't happen that way. You can watch the class later. I think we will now move ahead. So the next discussion that we will do is on I'm not looking at your messages now. Currency of investment. Earlier, I used to see that the CA Institute used to focus on currency of borrowing. In which currency should a firm borrow? If I'm an Indian company like Reliance Industries, last week, they went for an external commercial borrowing of $4 million or $4 billion, I don't remember. They went for an external commercial borrowing. So they went for a dollar borrowing at a very low yield, I think some 120 basis point over the relevant treasury rate. So that was a very competitive rate that Reliance Industries achieved. So why did they go for an ECB? Because they got a lower rate and they are expecting dollar to depreciate in case they are not hedging, and so on and so forth. So currency of borrowing is something that ICI had always been very active. But for the last 3-4 years, ICI has shifted their focus on currency of investment. In which currency should we invest our surplus funds? Because there's so much of FII money, there's so much of FDI, even the money markets are opening up, that they have shifted their focus on currency of investment. So when you have some surplus fund, say you are a Australian company, so your home currency is what? Australian dollars, and you have some surplus funds. You can invest in Australia, or you can invest in India, you can invest in US, whatever. So they'll ask us, where should we invest? Every problem of investment may have a different flavor, because are we investing in the equity market, or are we investing in the money market, or what? Can have its own flavor. So it depends on the structure of the sum. There's a very popular sum that has come, I think now 2 or 3 times in the exam in recent years, after 2014-15. It has come around 3-4 times, a big sum, where a bank has a surplus fund for 2 months or 3 months, and it has to decide where to invest. The sum, when it came the first time, it was a UK bank, which was having surplus US dollar. And categorically it was mentioned in the sum in the last line that you are supposed to find out the net gain in pound. That was beautifully written over there. But the next time the CA Institute set this sum, it's an Australian bank which has a dollar surplus. And unfortunately, they have not mentioned at the end that we are supposed to find out the net gain in which currency. So they have calculated the net gain twice. Once because it's an Australian bank in Australian dollar, and once in US dollar. They've done it twice. I think we cannot do this way. We should always be prepared that for that type of sum, when I say that type, yeah, for SFM, you need to remember the types. Okay, especially when the sums become important. So in that case, for that type of sum, we will find out the net gain in the currency of the particular bank. If it's a UK bank in pound terms, if it's an Australian bank in Australian dollar terms, unless otherwise mentioned. It's quite a good sum, which involves a lot of conversion. Many people might have remembered. In fact, we have done the sum in class, I know. But I don't know why people are struggling with the sum again and again. They do some mistake in interpreting the sum. They're not able to manage the length of the sum. They do some mistake in the conversion part of the sum. They carry out mistakes. Any papers that I've seen, people who send the papers to me, once they are dissatisfied and they call for recorrection, I see everybody gets the sum wrong. And ICI is very hard in doing corrections. If people are doing a mistake and their answer not matching, in that case, they're giving very less marks. If you ask about, sir, partial marks, step marking is there. Yes, it is there, but step marking has become a curse now. Why? Because since step marking is there, so if the process of your doing the sum does not match ICI process, then the examiner who doesn't have any head, any brains at all, okay, he checks each step and he finds none of your step matches. So it has become even a more riskier thing for a good conceptual student. So whatever solutions I have done in class with you all, they are very fluent. Okay, the flow is very good, you understand. But you need to look at ICI solution also, because the flow has to match with ICI flow, because step marking is there. It's a very, very important thing which I have said in the last 2 minutes. If you pay attention, you would save a lot of marks for yourself. So, you know the concepts via my classes. Do look at ICI solution. See whether my solution and their solution is completely inconsistent, even if the final answer is matching. So, if it's happening, step marking wise, you will lose marks. You're not the language, but the flow has to match ICI. The steps has to match. It has to come that way. We earlier used to say, it doesn't matter if the final answer is matching. Here, even the process has to matter. It's not the final answer. I'm not talking about the language. Okay, it's a very important thing that I've told you. People who have listened with their ears open will gain a lot. So currency of investment, there are 3 or 4 types of sums. Okay, let's see the big one which we have already done in the class, but which once again came in the exam. Which sum is that? It's question 21, Abhinash is saying. So sorry, I thought it's earlier. Oh, this is the sum that we had done in class, yeah. Question number 21 is the exact sum that is there in our study mat, as in our SSCI mat, which we had done in class, and this is a better sum. Can you just locate which is the other sum? Oh, question 7. Shobita is saying it's question 7. Okay, question number 21 is the correct sum, the properly worded sum, and it is there in our mat, and question number 7 is also there. If you all look at question number 7, I think that is also there. Just 1 second. Yeah, question number 7. So for the sake of convenience, I will read question number 7. 7 and 21 are same. 21 is perfectly designed. It is there in our mat. And question number 7 came recently, which is not perfectly designed. KGF Bank's Sydney branch had surplus funds of US dollar 7 lakh. So it's a Sydney bank, Australian bank. but surplus is in dollar terms 7 lakh for a period of 2 months. Cost of funds to the bank is 6% per annum. Cost of funds to the bank is 6% per annum. So what is the amount to be paid after 2 months? 7 lakh plus 6% of 7 lakh into 2 by 12. Please find out. 7 lakh plus 2% of 6% of 7 lakh into 2 by 12. 7 lakh plus 6% of 7 lakh into 2 by 12. Okay, the interest part is coming to 7,000 US dollar. So then it's 7 lakh 7,000 US dollar that we have to repay. Remember? So the Sydney Bank has to repay 7 lakh 7,000 US dollar. Okay, it is a deposit from somebody, the 7 lakh dollar. So 7 lakh 7,000 has to be paid. I don't know, some people are saying 1, 2, 3, 6, 6, 6, and others are saying 7,000. Can we just calculate, please? It's 2 months, not 3 months. 6% of 7 lakh is like 42,000. 42,000 into 2 by 12, 1/6 is 7,000. It's exactly 7,000. I don't know how people are saying 1, 2, 3, 6, 6, 7. That's totally wrong. So it's 7,000 plus 7 lakh. 7 lakh 7,000. Okay. They propose to invest the funds in Sydney, that is Australia, New York, that is US, or Tokyo, and obtain the best yield without any exchange risk to the bank. Following rates of interest are available at the 3 centers. So you can see the best rate is there in New York, 8%. Then Sydney, 7.5%. Then Tokyo, 4%. The market rate in Australia for US dollar and yen are as under. So we have Sydney on New York. We have Sydney on Tokyo. I've always told you, whether it's Sydney on New York or New York on Sydney, that does not tell me something about the base currency. I have to apply my common sense. So I know that Japan, that is yen, is a very, very weak currency. Yen ka koi औकात nahi hai. It's a very weak currency. So when we have Sydney on Tokyo, I'm looking at Sydney on Tokyo, and I find the rate is 79 point something. The rate cannot be of yen. Sydney on Tokyo, and I find the rate is 79 point something. The rate cannot be of yen. So I understood the base currency is Australian dollar. So the second rate is yen per Australian dollar. So the first rate is dollar per Australian dollar. I hope it's fine. I understood from the second rate that it's yen per Australian dollar. So the first rate is dollar per Australian dollar. Perfect. So Australian dollar is the base currency. Australian dollar is the base currency. Okay. Which rate is illogically given, not required? You can guess it. Which rate is illogically given, not required? In the paper, when you get the illogical thing not required, should be cancelled by pencil, so that your mind doesn't go over there and by mistake you don't use that number. You don't know what happens in the exam. In stress, everybody can make a mistake. So which rate is illogically given? The 1 month rate. The 1 month rate is illogically given. If I were taking the paper, I would have crossed it. And also, what you have understood, that the first rate is dollar per Australian dollar, the second rate is yen per dollar. That should also be written in the paper itself, in the exam hall. Okay? Perfect. And also see that the swap points for yen per Australian dollar are high-low. So they would be deducted. In the rhythm, you may add it, they would be deducted. While the dollar per Australian dollar swap points are low-high, they would be added. Small things. At which center will the investment be made, and what will be the net gain to the bank on the invested funds? I will not be able to open question number 21. You can check it later. If you will check the last line in that question number 21, I don't remember the exact words, but it was net gain in pound terms. Net gain in pound terms. Net gain in pound terms. Because it was a UK bank over there. Here it should be net gain in Australian dollar terms. Net gain in Australian dollar terms. So I will solve the sum in Australian dollar terms. If I am a good student, I have done the sum in class, I am prepared. When the sum comes in the exam, I understand, okay, somebody has just edited the sum, changed the name, changed the rates and given the sum. Okay. So accordingly, we'll find out the answer in Australian dollar. Somebody's helping me outside, so written nearest pound in the 21 sum. So nearest pound means we don't have to go into decimal places when amounts are involved. Of course, when exchange rates are involved, we will use 4 decimal places because 4 decimal places given in the sum. Okay, but when amounts are involved, we will round them off. We will not go to decimal places. Fine? Yes, let's proceed. So what we find is, if we invest in New York, that's the easier one, New York. Let's have a look, please. If you invest in New York, you're investing in dollars, you already have dollars. So in that case, 8% is the return you're going to earn, and 6% is the cost of fund. 8 minus 6 is what? 2. 8 minus 6 is 2. Can you please calculate 2% of 7 lakh into 2 by 12? Can you please calculate 2% of 7 lakh into 2 by 12? I have done 8 minus 6, that is 2%. 2% of 7 lakh into 2 by 12. I'm doing the second one, investment in New York, because that's really enticing. 8 minus 6, 2% of 7 lakh into 2 by 12. Okay, so we are getting $2,333. $2,333. But I want to get the answer in Australian dollars. So $2,333 will be sold to get Australian dollars. So we need to sell dollars and buy Australian dollar. Australian dollar is the base currency. Australian dollar is the base currency. So we have to buy Australian dollar. So the rate will be 0.7300 plus 0.0030. 0.7300 plus 0.0030. So it's 0.7330. 0.7330. Are you okay? 0.7330. 0.7300 plus 0.0030 is 0.7330. 0.7330 shall be the rate. So 0.7330. So you all got $2,333. That divided by 0.7330. $2,333 divided by 0.7330. 2,333.33 whatever divided by 0.7330. It's coming to what? It's coming to 3183, around about 3183 Australian dollars. Let's check the answer. 3183 Australian dollars. Investment in New York, 3183 Australian dollars. Can you see this? It's 3183 Australian dollars. It's 3183 Australian dollars. Okay, they're given the answer in dollars also, Australian dollar also. I'll give the answer in Australian dollar because it's on Australian bank. Okay, so it's 3183 Australian dollars. 3183 Australian dollars. Now we come to the first part, investment in Sydney. Now, if we want to invest in Sydney, we have to convert 7 lakh into Australian dollar spot. You have $7 lakh. You want to invest it in Australian dollars. You have to convert $7 lakh spot. To sell $7 lakh, that is buy Australian dollar 7 lakh spot. To buy Australian dollar 7 lakh spot at 0.73. So 7 lakh divided by 0.73. 7 lakh divided by 0.73. We are doing the alternative one, investment in Sydney. So converting 7 lakh US dollar into Australian dollar. So we are buying Australian dollar spot at 0.73. 7 lakh divided by 0.73. It is 958904 approx. 958904. 958904 Australian dollar. 958904 is invested at 7.5% per annum for 2 months. 958904 is invested at 7.5% per annum for 2 months. 958904 is invested at 7.5% per annum for 2 months. So what is the total amount we get? 958904 plus 2% of 958904 into 2 by 12. I think the interest is coming to 11986. So if we add that up to the principal, 11986 is the interest. If we add that up, the total amount is coming to 970890. It's coming to 970890. Most people are saying 970890. 970890. That's the best form of revision taking place for those who are really doing the active thing. 970890 or 990, some people are saying, I don't know, 970890. So that is the Australian dollar you're going to get, and you want to convert into Australian dollar. So leave it that way. 970890. That's it. Now, what we have to repay? $7,07,000. Hope you remember. We have to repay $7,07,000 US dollar. So we will buy it 2 months forward. $7,07,000 US dollar. We'll buy it 2 months forward.
That means sell Australian dollar 2 month forward. So the rate for selling Australian dollar 2 month forward is 0.7125. Did you see it? 0.7125. So 7,07,000 into 0.7125. 7,07,000 into 0.7125. 7,07,000 into 0.7125. 7,07,000 into 0.7125. 7,07,000 into 0.7125 is 503738. Is 503738. I said 7,07,000. Oh, 7,07,000 divided by 7,07,000 divided by 0.7125. Sorry. It's divided by 7,07,000 divided by 0.7125 divided by, because the base currency is Australian dollar, whereas the amount 7,07,000 was US dollar. So it's 992,281. It's bigger amount. The outflow is bigger, 992,281. It's bigger than what we got earlier. 992,281. Okay, 992,281 is the outflow. The inflow was lower. So there's a loss. There's a loss. Okay, there is a loss. If we invest in Sydney, there's a net loss, not net gain. There's a net loss. Let's see. So they've done the same. 970,890. Then 7,07,000 divided by 0.7125, 992,281. They got a loss of Australian dollar 21391. Australian dollar 21391. There's no need to calculate 15,241. Australian dollar 21391 is the answer. Australian dollar 21391. We got this figure. You all said 970,890. That was the amount invested over there for 2 months. And we got the 7,07,000 by 0.7125. Okay, forward buying of US dollar. So the difference is 21391. 21391. 21391. Why are we rounding off instead of keeping it in decimals? So Saloni Kedia, you're not listening at all. It was written in the question. You have to listen. Okay, in this question it was not written, in fact. Otherwise, it was written in the pound question that round off to the nearest pound. Okay, so only the exchange rates are being taken in decimals and the amounts are being taken in round figures. In round figures. Anyways, when big amounts are involved, 5 lakh something, 7 lakh something, there is no sense in taking decimals. 5,28,223.27, it doesn't help. So common sense is above everything when rounding off is concerned. So this is how you invest in Sydney. When you invest in Tokyo, you have to convert $7 lakh into yen. But we are not given the rate between yen and dollars. So you have to apply the cross rate. Okay, $7 lakh has to be converted into yen. So you can convert $7 lakh into Australian dollars and convert Australian dollars into yen. Right now you converted 7 lakh into Australian dollars na spot at 0.7300. That Australian dollar you convert into yen. Okay, you are buying yen. That means you are selling Australian dollar at 79.09. So instead of cross rate, you can do what? You had already converted the $7 lakh into Australian dollar at 0.73. You got 9 lakh something. You convert that 9 lakh something at 79. Okay. And you are able to get how much yen? It's a big amount of yen because the yen is a weak currency. So big amount. So that much yen and that much yen we will invest at the rate of 4%. I am not doing it further. We have done it in class. It's like a double help. Okay. I'm not doing it because my throat is not allowing me to speak the numbers again and again with so much of prominence. So this sum number 21 is the one which we did in class, and this sum is the same sum. It can come yet again. I've seen persistency of the CA Institute in going after particular types of sums. And the reason why I picked up this sum is because most of the people who are sending me the papers are getting it wrong some way or the other. So you have to write and do it, or you have to do it on rough that you are getting the answer. No, it is not that yeah, I know it. Yeah, I know it won't do. You have to actually get the answer. Okay, so do practice and get the answer. My throat is not allowing me to continue anymore. So I am ending the class. I also have a session, I think at 9:30 p.m. with CFA students who have passed CFA level 1 today. So I have to pick up the throat again for that time. These classes will be there on the Ulan app. You can watch them in a span of 6 months from the time you logged in to those classes. The PDF has been shared on Telegram. The schedule has been shared on Telegram. Which sums are new, which sums are same, which sums are similar. That has also been shared on Telegram. CA Final Telegram channel. There it has been shared. Next class is tomorrow evening 7 p.m. We are going to move towards the new sums. Currency of investment is not over. There are fresh type of sums remaining to be discussed in currency of investment. We will do it tomorrow. Okay. So bye-bye for now.